Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Wednesday afternoon, we have McCormack, factor and core equity strategist at Invesco, to discuss Nasdaq-100 weekly performance. We'll also touch on the Fed and, of course, Microsoft earnings. Ryan, it's great to see you as always. Welcome back to Trade Talks, and let's talk about the weekly performance that you saw in the Nasdaq-100 and, of course, some of your thoughts around the Fed.
Yeah, it's great to be here, even despite the performance that we saw over the last week with QQQ and QQQM down near 7% on the week. S&P 500 down 4.81%. S&P 500 value down over 3%. Absent a tremendous reversal intraday on Monday, we just saw a sea of red across the week, and you know, it seems like it was largely driven by sentiment. There wasn't like a huge catalyst out there. Certainly risks in the escalating Russia-Ukraine situation, but it largely felt like market participants were waiting for today, which of course was the Fed meeting. So at 2 o'clock, we saw no real surprises coming out of the Fed. The Fed indicated that it will be appropriate to raise rates soon. So kind of the read through there will be March with the conclusion of the asset purchase program, and the Fed will likely lift off in March. After liftoff, they're going to look to reduce the balance sheet. But within there, Powell noted that the economy and employment have strengthened and unemployment has declined substantially. So kind of looking at the Fed's dual mandate. You know, throughout both the statement and the press conference, you know, they noted that the Fed's going to be transparent and flexible. So there's no preset plan for rate hikes. He expects inflation to decline over the course of the year, and that the Fed will be nimble in trying to evaluate and tackle any sort of changes in inflation. But really, you know, just wants to keep the options open. Similarly, kind of details on on shrinking the Fed's balance sheet is going to be discussed in the next meeting, but it was mentioned that they're looking to hold treasuries long term. You know, so far throughout all of this, I think the Fed has been very deliberate. They've talked about the word telegraphing any sort of action, and as long as there's no real surprises in these meetings and statements, markets have largely viewed confirmation of what was said favorably. And you know, I think when we look today, markets up. They paired gains after some of the questions on the shrinking balance sheet, but generally, you know, I think there was a bit of a rebound there, and QQQ was up 2% on the day. Right before I logged on. So, you know, I think the tone of today is stay flexible from the Fed.
It certainly is. And Ryan, if we take a look at your next chart here, when we talk about the sectors that have been contributing to performance, what are you watching there?
Yeah, you know, this week there was nowhere to hide, right? So red across the board, discretionary, communication services, tech, Qs, heavyweights, all hit hard. Energy, really the only sector in positive territory. You know, of course, alongside that inflationary trade and amid the worries in Russia and Ukraine driving prices a little bit higher. But you know, obviously, we see a lot of a growth rebound today. You know, in those hard hit sectors like technology, and you know, I think that will propel QQQ forward, you know, hopefully if sentiment remains high.
And finally, Ryan, let's wrap up. Microsoft, certainly one of the heavyweights of the Nasdaq-100, reporting the quarter last night.
Yeah, so you know, I think you look at the Microsoft report last night, and it was, I would say, a very good earnings report. But initially on the news, you saw the stock traded lower. I mean, that may have been part of sentiment, and then, you know, a little bit of worry about future growth. But look, they reported revenue of 51.73 billion bucks. It beat estimates. It's the first time revenue exceeded $50 billion in a quarter, and it represents 20% year-over-year growth. So that's the 18th consecutive quarter that Microsoft has grown year-over-year revenue by 10% or more. The last time they'd failed to grow by 10% or more was the quarter ended June 30th, 2017. Earnings beat by 22%. The concerns and the sell-off initially after the report were around Azure's growth at about 46%, which is Microsoft's kind of cloud computing world. But then, you know, they looked at Q3 guidance, which was released a little bit later, of 48.5 to 49.3 billion, which beat analyst expectations, and then specifically revenue for its intelligent cloud business was above street estimates. So pretty good earnings report from Microsoft. You know, similarly, we saw earnings from Texas Instruments that beat beat expectations on the street. So kind of started the day off on a pretty decent note. But as we look forward, this is kind of the big earnings, the big earnings season for the QQQ heavyweights. We have Tesla tonight, we have Apple tomorrow night, and then next week, Facebook, Alphabet, and Amazon. So hopefully a lot to point to, and hopefully continued decent performance from some of these growthier names.
All right, we'll keep keeping you busy, Ryan. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.